Hello, fellow investors. Welcome to our second session. So far, you should have about 15 stocks to choose from. And we're not suggesting that you purchase 15 stocks, but at least you have now a list of companies to choose from. So for each company that you chose five at the beginning. You just went around your house and just searched for a company to even consider to put on your list of five. Then we took that five and found two other companies within their peer group. So now you should have about 15 companies. And let's talk about the numbers. So you have, how do you compare the three companies? So you have the one that you chose and then two other in the peer group. So there's three for the first one. So if you're a person of numbers, this was the book that I have recommended, Chicks Laying Nest Eggs. And on page 187, there's a little formula to use. I don't know if you can see it, but there it is. So anyway, it gives you looking for the gross margin. You want that to be greater than 50%. The net margin greater than 8%. Cash to long-term debt greater than 1.0. Flow ratio, you want that to be less than 1.5. Sales, we want to increase. So that's the example that is given in the book, and I believe they got that from the Motley Fool. But if you go in there, the book, if you did get the book, it tells you the formulas. So when I started out, some of the recommendations that I came across. But that's what I like about the IBD. It does all the work for me because I don't have time to sit there and calculate on each company. So, the indicators in finding a good stock, they have different formulas, but you'll find different investors use different formulas, different strategies, and so you find the one that you're most comfortable with. So when I first started, I just started just what I'm teaching you. Find a company, go out, get the value line, go online and pull from the numbers from the company, from their direct website. I use Yahoo Financial. So as a young investor, that's how I did it. But now I do things a little differently. And we'll talk about that in a more advanced classes. But for now, I will get you started. If you never purchased stock before and you want to purchase stock, then this will get you there. So, get the book, go to the library and get it. If you can't, don't have the money to buy the book. If you don't have the money to buy the book, then maybe now is not the time for you to invest, because you want to have some money to invest into the stock market. And it's money that you won't miss. Monies that if you do lose, that you're not, you're not going under, that your lights are not being turned out, or you're not being put out of your house. So you definitely don't want to invest money that you need for important things. So we have those companies, and so how do you find out information besides going to their website? Every company out there has a symbol. So like, for instance, Procter & Gamble is PG, Ford is F, Facebook is FB, General Electric is GE. If that's how you find out what's going on a daily basis on the stock. So if I want to look up to see what the price today on Procter & Gamble, I just go in. I can go to Yahoo Finance search. I can go, I think Google Finance has one too. You can go to IBD, plug it in. I mean, there's plenty of search engines where you can find the symbol for companies. And if you can't find it, when you go to the library to get the value line, you look it up by the name of the company and it will always have the symbol. So take your 15 companies, add the symbol, get the book for the formula, and do some numbers. Where do you get these numbers? You can get them from directly from the websites, Morningstar, there's so many websites out there that you can find numbers on companies. And just do a comparison. Do it on all three companies and see which one has the best numbers. And you might find another company outside of the one that you're looking at that is on the verge of making you some good money. So what I want you to also decide how much money you're going to invest. I started my teenage daughter's account with $100. I started my personal account with $500. My investment club, we started out, I don't know if we had 10,000, but but over a course of time of each member paying $50 a month, we gradually grew our money. So, go in at your own level. It's your account. No one knows what's going on inside your account but you. There's times where you can take $100 and buy, if your stock is $20 a share, hey, you can buy, 4 shares of stocks, because there's always fees. There's always fees involved when you purchase stock. So you can get 4 shares of stock. And then just watch your stock as it's growing and increasing. I set perimeters. If my stock drops below 5%, I have an alert set. If it goes up to 20-25%, I have alert. It alerts me. So what happens during those alerts? If it drops below 5% of what I pay for it, I'm going to sell it. That way, it's not a big loss. I can take some of my money back and move on to something else. If it's growing and it's at 20-25%, I look at the numbers. If it's stronger than the day I bought it, at that time, I decide to either purchase some more stock or stay where I am and let that just go for the ride up the mountain. So, or if it's peaked out at that 20%, then I can sell it, get my money out, and take my 20% gain and go buy something else, or put it aside until I find my next stock that I would like to purchase. I keep it simple. When I first started out, I was trying to buy everything, and that gets overwhelming sometimes. So one of my mentors, just said, if you find a